This concept video is a continuation of debits and credits, part 2. We're going to learn how to express the effects of business transaction in terms of debits and credits on the different types of accounts. Let's take the first transaction. Assume a company issues shares to its investors for $10,000. Two accounts are affected: cash and capital stock. Well, cash increases, so an increase in cash is recorded on the left-hand side. Now remember, left means debit in old Italian. And the increase in capital stock is recorded on the right-hand side, the credit side. Next, let's assume that the company borrowed $5,000 from the bank by signing a note, which is a promise to pay at a later date, which usually includes interest. Now, to record that for the accounting, we receive $5,000 in cash, so our cash account goes up, so it's debit, $5,000 cash. Our liability account also goes up, we have to pay back the bank, and so therefore it's credit. Liabilities $5,000. Now, most transactions are revenue and expense transactions. Now, these are very easy because a revenue account only increases on the right-hand side. You would never have any transaction where you lose revenue or there's a revenue decrease. On the same token, or by the same token, expenses, which decrease shareholders' equity, and a decrease in shareholders' equity is on the debit side, so all expenses are recorded on the debit side. You never have a decrease in expense, and the same with dividends. So most of those accounts that have to deal with expenses, revenue, always the same. Credit revenue, debit cash. Expenses, debit expense, credit cash. Okay, here we go. Transaction is the company received $1,000 cash for performing services for the customer. Well, the cash account goes up by $1,000, and that's recorded as a debit to cash. Service revenue goes up by $1,000, and that's recorded as a credit to service revenue. Now let's assume the company paid $600 in salaries to their employees. Okay, salary expense increases, so that's on the debit side. All expenses are debit. And I paid cash, so that's the credit side. And that's simply how I record that business trend. And when the company pays dividends, I record dividends as a debit to dividends, which dividends increase. An increase in dividends is a decrease in the shareholders' equity account. That's why we record it on the left-hand side. And of course, my cash goes down by that same amount. Now, to summarize the effect of all the transactions on each account, well, that is fairly simple. These accounts, cash account would be a debit balance account. Now, it had two transactions that increased the cash account, $10,005, and one transaction that decreased it. So therefore, we just simply add up the debit side, subtract the credit, and we say that cash has a $11,000 debit balance. The same token, I borrowed $5,000 from the bank. Let's assume I paid them back $1,000. Therefore, what I owe the bank now is $4,000, and that's recorded as a notes payable credit, $4,000. And in that way, we can record every type of business transaction, always where debits equal credits, as long as we follow that double entry accounting system. That was first published back 500 years ago. Okay.